are absolutely flat. 4-odd point change is all that you've got on the Nifty right now. Rohit Srivastava, fund manager with Sher Khan, is joining us. Rohit, good morning. Good to have you here.
Morning.
Global markets continue to rise, Rohit. That's the big tailwind. And the market here isn't doing all that badly either.
Yeah, markets are doing well on a broad basis, but if you just look at the key indices, whether it's the Dow or the S&P, they're edging up, 10, 20 points a day. So you're not really seeing significant gains in the key indices, but definitely they're not reversed yet. So you cannot say that the trend is down. But those trends could be maturing, and I think a week back we were discussing, the carry trade and other issues. We've still not seen a reversal in the USD JPY, so I think that's the key indicator as to when you see a reversal in flows. One of the other signs of that happening, a potential dollar top and a bottom in commodities is also in place, because we've seen some very extreme sentiment against commodities, whether it's gold, silver, crude or copper. It's almost felt like that entire pack was reaching the end of the world. But if you just look at the CRB index itself, it's just 3% below the low it made approximately a year back. So because prices went up and then sold off very sharply, and specifically in silver and crude, that it feels like a panic. But essentially, I'm sensing that negative sentiment is so extreme that you should be seeing some kind of a very meaningful bottom in the commodity space for the next year itself. So I am sensing that there would be a lot of money flow into the commodities which exited after QE3 started in 2011, and would that mean that money moves out of equities is something that we'll have to watch. It may happen immediately, or it may happen after a while. There could be some lead lag, but usually, at least we've seen this for the last couple of over a 5 to 8 year period, that money is moved in and out of one asset class to the other. And usually in the last stages, like we saw in the last 2007-8, even as equities peaked, commodities continued to go higher. So we may be in that kind of a stage also. And the third alternate is that you're actually going to press the hyperinflationary button, because you are still seeing various central banks continue to print money because inflation has not come back. And maybe this commodity bottom that is visible on charts might be an early indication that you're really going to get inflation back, because everyone's just going to go out of way to get it back. So I think one of those scenarios, but clearly commodities are bottom, and whether equities top out or continue with the entire pack would be a call on inflation or deflation.
Yeah. What's happening in Japan, Rohit, what do you make of it? You can pick any period in the last 20 years or so. And for the real economy, one can say that these QE type stimulus packages hasn't worked. But, well, you get a recession and there's call to do more.
Yeah, so what they end up doing is that the QE money ends up going into a lot of assets. Ideally, the object of a QE should be that the money is directly into some kind of economic activity, whether it's development in infrastructure and so on. But if that does not happen and it ends up going simply into assets and chasing yields, then you end up creating financial bubbles, and I think then your core economy does not grow. That's the complaint that people have against even the US market. While you've seen some kind of growth, they say it's much less than compared to you've had in previous recoveries, and given that you've printed so much of money. So the same case with Japan, they've just entered that race, and so far it's not working. So will they do what the US did in 2011? They went from QE2 to QE3. They've already announced a significant jump up in the amount of money they want to put in place. So let's see what kind of impact that has, which is why I said that, will this just lead to a turnaround in one asset class or all asset classes? Will it be hyperinflationary, or is it just going to, have we reached the point where, we will say that this is not working and, all markets start turning around? So let's see. I think the risk is still there. We can't completely rule it out. And I would like to see the markets give me that answer before taking too much risk.
So if you're a I mean, actually, if you're a global macro kind of fund manager, then you've had it pretty bad, Rohit, right? Because you would traditionally depend on correlations and what this does because of what that is doing, and those things haven't worked. But let that be. Keep that aside. What is your sense on? I mean, if you had money to invest anywhere in the world, what would you put it into? Would you put it into commodities? What kind of commodities?
Okay. If I had to put it in right now, I think the case for gold is very, very strong. And definitely when gold happens, silver does too. I just spoke about the CRB index. It's retraced exactly 61% of the gains it made between 2009 and 2011. So my sense is that the entire commodity pack would do well for some time. But after some time, you might see a peak again in maybe crude and copper. But I think you'll continue to do very well with the precious metals. So I would be significantly bullish on the precious metals at this stage. So that would be one asset class I would over allocate to and probably significantly reduce allocations to equities. Not that I've been personally very gung-ho about equities. I've picked trades, but I've always been cautious. So I think that's a given. But I think you're reaching the point where you would have to significantly reduce exposure to equities even where you were bullish. And one of the key triggers, I think, would be within the currencies when you see the JPY start cooling off, which means the USD JPY, which means the JPY starts getting stronger. I think that would put pressure on a lot of the assets that have been going up and which has mostly been equities. So I think another place where I would want to be is essentially in shorting on the short side of particular currencies. Now, the dollar has been getting strong. It could see a correction, but I think a lot of the Asian currencies, I was just looking at the Taiwanese dollar, is just moving much lower against the dollar. So is the British pound. The USDINR has been subdued for very long, and I think the pressure is going to build on the government as you see seeing the exports really not picking up. At some point of time, they're going to have to let go of putting pressure on the USDINR to remain at these levels. And if there's a lot of money inflow, they might actually have to force it on the way up. So I think being long the dollar from an Indian perspective is also an asset that you should be hedged against, essentially to take care of that risk, which is the currency risk, and also of the possibility that inflation actually comes back.
Okay. And so basically you'd buy the dollar, and you said you'd be very bullish on gold right now.
In India, I would be long USDINR, I would be long gold. These are two assets I would be long. In equities, I can't be short yet. Probably if it breaks 8200, that gives me a bigger picture to be for extreme weakness. But in the short term, I think we are watching 8380. Below that, we would start building initial shorts. And on the upside, I'm looking at resistance at around 8480. And unless that is surpassed, it would not be possible to call for high levels. If we do get past that, then it's possible that the Nifty is going all the way to 8650, 8700. So 8480 and 8380 are the key short-term levels on the index itself, but still not turning bearish. But I think we're at the end of at least one short-term move on the way up. So we should be looking for some kind of a correction in the Nifty.
Okay, so you're saying the odds are higher that the market actually corrects rather than take out 8480 and move higher to, as you said, 86, 8650, etc., right? The odds are that we'll head down. Yeah. Okay, and but you said short below, the market breaks below 8200.
8380 is where we would start building, and I think after 8200 it would create a case for a much deeper correction, which means looking at going back to like 7500 or so. That case would develop below 7200, but below 7380 I think the initial weakness would show up.
What are your any specific stock specific trades?
Yeah, out of these stocks where I see weakness, probably DLF is one where I think it's bounced back pretty sharply from the worst case that it was facing, and it's close to the 40-day, around 143 rupees. I think from there it can start heading down again. Tata Motors also, I feel the auto pack should start seeing some weakness, and Tata Motors should be one of the weaker ones out of that. So it's already showing some loss of momentum in the last couple of days. So I think it could come down to at least 500. So those are some of the sell side trades. On the long side, one sector or particular stocks which I'm liking are in the sugar space. Bajaj Hindustan is one stock which I've been recommending from the longer term. So maybe there's something developing on the sugar side, because you can see that momentum even in Balrampur Chini and other sugar stocks. So I think that sector is one where I would have some long exposure. I used to be bullish on the OMCs, but as I'm seeing a bottom in crude, I think it's going to be a testing phase for the deregulation story that has driven HPCL. I recommended it over a year back. It's moved from 180 to almost 580. It stopped at 550 two times in the past over the last 10 years, and so it's close to that level again. So there's a potential that, as oil prices bounce back, you do see some selling or a top in the oil marketing companies. So I would somewhere start becoming a little cautious on the oil marketing space.
Got that. Rohit, thanks very much for your time. Good talking to you. Appreciate it, as always. Rohit Srivastava, Fund Manager with Sharekhan. We're taking a break here. We've got Vikash Kumar Jain.